All right, good morning, guys. Thanks for joining into our live session this morning. We're going to be breaking down some charts for you, hopefully finding some live trading setups that you can take advantage of. And then Nate is going to go into an educational lesson. All right, so let's go ahead and get started, jump into these charts and see what's going on this morning.
Hey, just really quick to chime in. Aiden, can you add yourself to the stream? We can't hear you.
That explains it.
There we go.
Sorry, technical difficulties. All right, we should be good now. Awesome. All right. Let me know if you can't hear me, and I'll just proceed. All right. All right. So anyway, Cadchf 4-hour time frame. Obviously, we are still in a massive kind of rally to the upside. All right, but kind of given what's going on in the markets and looking at other pairs like CAD-JPY, which we can obviously use as correlation for CAD-CHF, I do believe we are potentially in now for a strong retracement back down to the downside. All right, so for me, obviously you can see the supply here with the structure break to the downside, lower high, lower low, lower high. I do believe this move, this price action here is quite corrective. Okay, and so what I'd like to see on this cross, hopefully this morning with New York Open, is a run on these highs trading into the supply here. Now, I wouldn't necessarily place a limit, although you certainly could, depending on your risk tolerance. You can place a limit, potentially 0.25, 0.5% risk. But what I would do personally is what we talked about last week. We want to see the time and price, the session open, manipulation, or if we trade up into our POI, we want to see a buy to sell, lower time frame, the break of structure for confirmation. That can provide a much tighter stop loss for us to sell it down and get a higher risk to reward trading intraday. All right, but this is the POI I have for sells. Do with it what you will. If you want to place a limit, that's totally up to you. But personally, I'm just letting you know I don't have a limit here yet, right? Just because, if this were in a overall downtrend, higher time frame, and the momentum was to the downside, higher time frame, I certainly would be placing a limit at this level. But just because it's not, and this is only kind of a lower time frame structure shift thus far, I'm kind of playing it a little bit safe. All right, so hopefully that makes sense for you. And most of you, if you watch Smart Money Sundays, I typically don't kind of branch outside of the majors, and so that was something new. Usually, I like to stick with pairs like EU and GU, etc. And so that's the setup I'm looking at on CAD CHF. Now let's talk a little bit about EU, everyone's favorite pair. All right, and if you remember from weeks ago, obviously we talked about this level as not being a valid structure point, right? Because this higher low did not produce a higher high. All right, so for me, I wasn't necessarily looking at this as, okay, we can't break this or we're breaking structure, because this to me was not necessarily valid structure. Okay, so now having run this low, trading into our last point of return here, I do believe we could see some type of reversal coming in to effect relatively soon. Okay, but given the momentum at the moment, I personally believe this low as well will be run out. Okay, on EU. Okay, unless we really start to slow down and accumulate. The momentum is so strong at the moment. I do believe we can take this out and then look for accumulation below the old low, potentially close the week above this low, and kind of maintain price within this overall trading range. All right, so obviously it's just been extremely, extremely bearish as of late, and there really hasn't been much relief. Okay, but we are getting into extreme discount. I mean, when's the last time we saw these prices? Was years ago. Okay, and so obviously lower prices is attractive for longs. Okay, for discount for longs, and we certainly, if you look at the 1 hour time frame here on EU, you could look at this as a potential accumulation, leaving these highs intact here. It's kind of descending liquidity, if you will, within these highs to ultimately be run out. Okay, so I might be potentially looking at this as kind of accumulation for a final sell to buy and a big spring to the upside that shifts momentum and structure back up to the upside. Okay, it's just not ready yet, in my opinion. And we're just getting into price points where it's kind of, scaring me to continue to sell this thing at such discount. Okay, if that makes sense. So let's sit on our hands on EU. Yeah, there's nothing at the moment, but I do believe it is relatively imminent that we do see some type of finally a push back up to the upside on this one. All right, so let's cover my other favorite, GU. And I typically go over EU and GU every single Sunday, guys, on our YouTube channel. It's a series called Smart Money Sundays. I just basically give an overall higher time frame breakdown of these markets going into each and every week, so that you're well prepared, and you can have the POIs and the bias and the conviction behind your intraday trading, and it helps tremendously. Everyone seems to love this series, so if you haven't already, make sure you check it out on our channel, Ariel Fx, every single Sunday. All right, but GU, and I'll reiterate kind of what I mentioned on the last live session, is I want you guys to treat this as if this was the 1 hour time frame. Okay, now this is the weekly, but I want you to treat it as if it's the 1 hour. We had our equal lows, right? Engineered liquidity, the move up here, engineered the liquidity resting beneath these lows here. Okay, we got sell stops and we got stop losses below these lows. So when we engineer the liquidity and the move higher here. So obviously we had the manipulation, the sell to buy running through the pool of liquidity, and then the break of structure subsequent. All right, so now, we are trading back down into weekly discount, which is great. That's what we want. Okay, if this was the 1 hour, we wouldn't want to be buying this thing up here on the 1 hour. We would want discount, right? So we are getting that discount finally. And we can pull a fib just to kind of confirm our levels. All right, and you can see we're trading into that 71.78.6 pocket. All right, so personally, I believe this short-term low here is going to be run out. All right, so go ahead and mark that off. I believe the liquidity beneath this low will be taken. Okay, and then we'll be trading into something underneath this low to the left. All right, and so if you go down to the daily time frame, bear with me. If you go down to the daily, you can see a very nice inefficiency here. Okay, coming in and around 1.1975 into 1.2. I do believe that is going to be our ultimate point of interest if we're going to look for a higher time frame swing back up to the upside, right? So running this low and then trading into, okay, our inefficiency, making the market efficient on the higher time frames before we see some type of reversal. And I do believe this thing can trade through this high ultimately, okay, through the old high, okay, and up into, we have a daily POI here at 1.48, okay, 1.5 ultimately. I think this wick might even be taken out, okay, and that would come in alignment with fundamental weakness expected on the dollar, okay. In my opinion, the dollar is doomed. Obviously, the inflation is already kicking in, the hyperinflation. And I don't really pay much attention to fundamentals. I don't really care about fundamentals. It's just a little added confluence for what the chart is telling us, right? And that is a potential higher time frame swing coming in on GU, running out all of this descending liquidity. Ultimately, these relative equal highs, this high here, trading into our POI to the left. All right, so that is GU. And until then, now for the here and now, I believe it would be very nice if we could kind of have some type of retracement up, run these relative equal highs here, and then trade into our ultimate level here. This would be nice. This would be a nice premium, okay, to get one final potential run down into our 1.2, 1.1975 POI. All right. So I wouldn't necessarily look at a run up here, okay, as a break of structure just yet for a trend reversal. I would just look at this as an engineering of liquidity to be run quickly, or we trade into our real POI in premium, and then we have an ultimate final leg to the downside. All right, so this level looks really nice to me. I really like 1.25, kind of 1.7, 1.2550. That area looks very, very good. A nice premium to get another leg to the downside. All right. So I guess I'll go over potentially one more and then hand it off to Nate. I know he's got quite a few that he wants to kind of break down today before he goes into kind of his lesson for the week. All right. So Nate, actually, yeah, I'll just go over Euro AUD quickly and then hand it off to you. All right. So Euro AUD, in my opinion, okay, and personally, I really like when we have engineered liquidity. Okay, if you know me, if you've been following me in my analysis, I really, really, really enjoy when we have perfectly equal highs. Why is that? It's because they're engineering the liquidity to ultimately be run out, right? To be taken out. Okay, these are never left intact. Doesn't mean it has to be taken out right now, right? But that gives us the confidence that ultimately we should still be kind of trading in that direction to seek out the liquidity, right? And especially in momentum. Okay, it would be one thing if momentum was to the downside and we left, these equal highs. They might take months to take those out, right? Like I said, it doesn't have to be immediate, but when momentum is to the upside and we have the equal highs, I like to continue to attack the market and look for opportunities to buy into equal highs, right? So we have these equal highs here, and obviously the first point of call is going to be this candle here. All right, we had the manipulation yesterday, the buy to sell to buy, creating the equal highs, engineering the liquidity, and we have our last little candlestick here, okay, before the inefficient move up. All right, so that brings us in around 1.51, okay, 1.5080, and you can even obviously pull a fib, but it's not necessary. It's obviously a nice discount, okay, our kind of pocket here, 61 to 78.6, or if we could get an intraday retracement, kind of running these lows, okay, down into that 71, 78.6. I prefer further discount. So 71.78.6 is kind of my sweet spot. But obviously this is our candlestick. That's more important than a fib ratio. All right. So looking at 5080 really is my comfortable level. I'd look to take this up into the negative 27. 1.5360 into 1.5400 is going to be my ultimate target, just an intraday continuation. Okay, but we have the conviction, we have the confidence behind continuing to look to buy this thing because we have engineered perfectly equal highs. Okay, and that's kind of something that happened with GJ yesterday, which I guess I'll show you quickly before I hand it off to Nate. But before I head over to GJ, I just want to preface it that, you know, sometimes when we have highs like this, okay, sometimes you will see just a random kind of run on this low first. Okay, they run the low, the liquidity here, okay, and then make that ultimate push up, buy to sell. Okay, so just keep that in the back of your mind. It doesn't always, just because you have equal highs, mean it's 100%. Okay, but it does increase the probability. All right. So let's go to GJ quickly, and I'll kind of break down the analysis that I shared this week for our VIP community that played out beautifully, beautifully. All right. And this is when price was trading in here. Okay. And you can go back to Smart Money Sundays. I might have even spoken about this on our prior live. I can't remember. But case in point, all right, we had engineered equal lows here, perfectly equal lows. As momentum shifts to the downside, our eyes shift, okay, to where's the liquidity? What are they seeking out now? Okay, and for me, as price was trading in this region here, my eyes were fixed on these twin lows. All right, so I was looking for every excuse to sell into these lows. Okay, it's a very, very simple yet powerful kind of understanding to have when you're trading. Is if you have a really, really clean target in terms of liquidity, that gives you so much confidence, right, in terms of your intraday bias to sell or buy into that liquidity as a target. All right, so for me, obviously it was the lows at 159, and if you zoom down to the lower time frame, okay, as price was trading here and just kind of consolidating, okay, I wanted to see a run up, manipulation. We have our sell to buy here. Price trades down into it. Demand fails to produce a higher high here, right? So we trade down into it. We fail to produce a higher high. We produce a lower high, right? So this now, when we break down, this becomes my focal point, right? And sure enough, as we engineer liquidity, we have the manipulation, the buy to sell right into that POI, okay? And that's the move that VIP caught. Okay, once you get that beautiful reaction and the break back lower, okay, you continue to scale your positions, right? Everyone thinks that you need to trade multiple different pairs, multiple different setups every single day, you know, if you're going to pass a funding challenge or something like that. It's not necessarily true. All right, you could have one really good setup, one really good pair with a very, very obvious and clean target like we had on GJ, right? Catch the initial entry, okay, confirmed. Beautiful wick entry. Now we're looking to scale in. We're break even on our initial position, so there's no risk in the equation. You scale and you add another position and trade with the momentum. All right, so I added another position here, sent that out to VIP members as well. Obviously, we ran a nice little intraday liquidity here, buy to sell, right? And then sure enough, all right, here's our equal lows. We trade directly through and into that liquidity. All right, so that's what I'm talking about. A little educational lesson from my part today that I wanted to share because it's something that's really, really been beneficial in my personal trading. So I hope you've taken value from this and understand the power of having engineered perfectly equal highs or equal lows. All right, so I'll go ahead and hand it off. He's got a bunch of things he wants to talk about. and a bunch of good looking setups for you guys today. So Nate, let's see here. Go ahead and stop share and add you in.
Hey guys, what's going on? Good morning to you all. Hope you all are doing well. So I'm going to be breaking down a few charts that I really enjoy looking at. So I like trading more of the exotics. Aiden likes to trade more of the majors. So I'll be talking about some great setups for you all. So I'm going to share my screen here, and then I will get into my lesson on imbalances afterwards. And then we'll have a little bit of a giveaway towards the end. So stay tuned for that. We're giving $50 away to a lucky winner who can answer a question correctly that was based off of our lesson last live session. So I'm going to share my screen. All right, perfect. So you all can see this, correct? Drop a 1 in the chat if you can, to make sure that you can hear me and see my screen.
Yeah, I got you.
Okay, perfect. Alrighty. Let's get right into it. So let's first start off by talking about AUDJPY. And again, stop me if you cannot hear me or see the screen. I'll be happy to fix that. So anyways, on my daily market breakdown that I make every single evening for our VIP members, I believe I even sent this out to our free members in our Discord as well. I talked about potential sells from these two levels. Why? Because one, we have broken structure back to the downside. This didn't really give me a lot of conviction because this could have been easily thought of as more of a liquidity run for a potential higher high. We ended up stopping lower high here, and then we formed that lower low after the break. So that really gave me that, okay, let's go pull back now and we can short this. So we took liquidity here, higher high in a lower time frame, higher high, higher low, higher low, came into demand, higher high, swept liquidity, fell. We can see this demand here never held. This demand was invalidated because of the break and close below. We should have, based upon structure, continued long, making another higher high. We never did. So now this area of demand turned into supply. So we broke, closed, lower low is formed. We should not come above this high here based upon structure. So I mentioned two different levels. One was an area of consolidation here and consolidation here, aka supply. So we pulled back up, engineered liquidity here. We can see the intermediate high here and high here. So prior to New York session, creating that high, this happened in London. So end of Asian session around 1 o'clock Eastern time in the morning. Engineered liquidity had a beautiful buy to sell, 9 o'clock in the morning Eastern time. That is prime New York session. We had a beautiful buy, a very nice reaction from our area of supply that was mentioned, 91.5 psych level for this. We have to engineer liquidity in order to free up liquidity for the big banks to be able to place their large orders to short off. So we ended up shorting off. We broke counter trend structure. Where's counter trend structure? Higher high, higher low, higher high, I guess, or relatively equal highs, higher low, higher high. Then we failed to make a higher low and then another higher high because we created that lower low. So what I was looking for on the 15-minute time frame while we were trading in here was a simple pullback into 90.6350. We ended up spilling back to the downside. Doesn't mean we can't pull back now, but I was really looking for this area of institutionally sponsored buying volume here to be mitigated. Again, I talk about this all the time. What happens when we engineer liquidity? We take it and we move away from it. We usually see a repricing event. We reprice and then we continue. The repricing allows us to have a better risk to reward when pulling back up into an area, in this case of supply. So three valid levels for you. If we go out to the 1 hour, we can see the consolidation here around this prior low, forming new supply, and then we fell again. So a pullback up into this level could be valid. imbalance fill, 1 hour 50 EMA is approaching. If we do come higher, I really like 90.6350. This thing has to continue to spill over. I'm really targeting 85, higher time frame. We have low resistance in here. It's just trickling. You see the trickling? There's nothing stopping price from continuing to sell short. So really, we should probably at least come into 85.8. But I really do like, if we scroll out to a higher time frame, the 4 hour, I guess you can say 86.3, but really just back down into discounted price. We can see a huge imbalance is forming. We're just seeing a higher time frame pullback. So to take advantage of this, if we do get a retracement, I'm looking at this sponsored candle move here, buy to sell, and then that 15-minute to 1 hour tiny area of supply. So 3 levels, one here, one here, one here. How I teach it in my VIP community is if you are taking advantage of these setups, obviously these are not direct signals because we are not financial advisors. We don't claim to be, so we can't give you exact signals for this. We give you high probable areas, everything that you need and everything that we're looking at to potentially take a trade. So what you could do is you could place, if we have 3 positions or 3 different levels, maybe a third of a risk here, third of a risk here, third risk here, just in case, we pull back and we get in at any one of these levels. Or you can, break it up into 3. So 1, 2, 3, divide that by 2. So more of like a 0.15% risk here, here, and here to give you a total of a 0.5% risk, waiting for confirmation at any one of these levels. So if we start to distribute or break counter trend structure at any one of these levels, when we pull back up into it, we can then add the rest of our risk in for a continuation, because we already have conviction that this is going short. We can see that across the board with XXXJPY, and the Aussie is quite weak at the moment. So just waiting for more confirmation around these levels to get a higher risk to reward setup, and to really just confirm that shorts are in order, which we can already kind of assume that to begin with. So that's AUDJPY, looking at those 3 levels. Mark those off on your chart, take a picture of it, whatever you want to do. Look out for these levels. Every single one of these levels that I go over really are highly probable. This level here I talked about a few days ago, pretty much hit to the T. Aussie dollar, sort of looking at the same thing. I was hoping price would get up a little bit higher into this area of supply. We never did. However, I do believe that since we are very strong to the downside here, any sort of retracement back up into this buy volume to sell, I'm looking to short. So kind of lines up with what Aiden was talking about with Euro AUD. If we can pull back up into this area of price around 6.990 or even 0.7, this area of supply, we could be looking to short. That looks very similar to Euro AUD if we can push down a little further into the demand to then take out the equal highs. So inversely correlated there. I don't have a pertinent setup at the moment. This may take a few days, maybe even into next week to really pull back up into, but this is my area of interest. I'm not going to be forcing anything else in here. Sometimes there are just no setups. There's just no actual level to take, and that's fine. You sit on our hands and wait for our levels to be met. If they don't, that's fine. We move on. So that's AUD USD. I'm going to go over, let's see, Euro GBP. I actually don't really want to talk about that today. Let me go over GBP Chef. So GBP Swiss franc, here's another one. So let's first talk about structure here. And even a 5-year-old can tell you, are we going short or going long? Well, we're going short. This is a bearish market. Structure is indicated here with the lower low, lower high. We made that lower low. We swept liquidity here, and then we subsequently made a lower low again, creating equal lows here. So this will be the draw on liquidity. As we can see, equal lows. We're looking for a pullback. We're not going to come above this level without breaking structure because this is our overall structure point. This low made this high. We swept this liquidity here, pulled back into an area of supply, and then made that lower low. So now we're looking for naturally a lower high and then a lower low to take out ultimately these lows here. I'm really targeting 1.2 on my sells. So we had 2 areas of interest. One played out. We never pushed up into 1.2350. 1.2350 is really getting back up into this premium price. Again, we love to be selling at premiums and buying at discounts. So if I pull my fib, really wanting to get back up into at least the 61.78.6, which we did. We did hit the 61.8. So that is good enough for me. However, not to say that we can't come higher. If we bust through these levels, 1.2350 will definitely be on the table. Why? Because we have an area of imbalance in here that I'm looking to take advantage of. We have our last buying volume here before the sell-off. We shouldn't come above this level. If we come up into this level here, I will be looking to short stops above the high because this is the LPOR. LPOR, last point of return. What does that mean? It simply means that the last point in which price could come to without breaking structure. So where is our more pertinent type of setup here that could play out today or even tomorrow? So we can see that we engineered liquidity, high here, a high here, a high here, sort of descending liquidity, but we didn't engineer it. We had our 5 in the morning London session manipulation move, buy to sell. You can see how we talked about time and price last week in our lesson, and it's just a continuation of that. Everything we trade is really based upon time and price. I don't trade anything outside of the time frame between about 3 a.m. and 11 a.m. Eastern, which is prime London and New York session, because that's where we see the most liquidity being swept and the highest probable moves. So we ended up coming into just a mini level of supply here. We tapped up into it. I did not set a limit order here because obviously I was targeting more of these levels up here. We ended up getting a reaction from that after sweeping liquidity, and then we broke counter trend back to the downside. So we engineered more liquidity here, buy to sell, broke structure. We pulled back up into this last buy to sell candle. Now, I will note that it's not just because I marked up the last buy to sell doesn't mean that this is a valid sponsor candle. You have to look at the actual candle that swept liquidity. That's going to be the target for the mitigation. It could have been this level here. If this candle was up a little bit higher, I probably would have placed my level at this candle. Well, you might say, well, why not this? This is the last buy to sell. Well, that doesn't matter because we have to look at what price the influx of orders came into. It's not about candles because you can go on any single time frame and look at all these different candles. The markets are fractal. So we have to look at the area in which liquidity was swept. These are the equal highs. This is descending liquidity. This is the candle that influx of orders, and then we moved away from it. Mitigation. So we had a little bit of drawdown there, but nonetheless swept, mitigated that level and made a lower low in the market compared to this low. So we can confirm shorts. So I'm going to go to the 4-hour time frame and show you now the supply levels in here. So we created upon the pullback a 1, 2, 3 pin pattern. That's just something I look at when determining potential supply and demand. Engulfing candle, and then here I'll just delete this for the time being. We had this level of imbalance, pulled back up into that imbalance, and also it was the area of supply. We can see that we filled imbalance and moved away from it very nicely, creating a new supply level. Let me get rid of this. The 1-hour time frame. As we pushed up, filled imbalance on the 4-hour coming into this supply, we created a new supply level. Again, 1, 2, 3 pin pattern, engulfing candle. We have the imbalance in here. Last buy to sell. I want price to pull back potentially up into this level here. Anywhere in here, I would like to be selling. Another potential level is this imbalance here, the wick between here and here. This is a lower time frame imbalance. Well, why do I have my box a little bit lower than this wick? Good question. Well, just going back to the 4-hour, it's simply just this imbalance right there. So pulling back up into our last buy to sell candle, our most recent one, 4-hour 50 EMA is approaching, looking for continuations short. So any one of these two areas of interest, I will definitely be looking to sell it from to continue with the overall trend in the market after we've seen the equal highs run, the liquidity drawn, run, break of counter trend structure. We should really not come above this high here. This is really our last point of return because we already mitigated this level. We already came up, filled the imbalance here, came into the supply. So really this is our last area of to look for shorts. If we break above this level, we'll probably come up into 1.2350, in which we will look for sells again. So shorts from, let's see, 1.22040 and 1.2223, something like that. So mark those areas off on your chart. I will be looking to sell that. Obviously, we love equal lows. Drawn liquidity will be this level here, ultimately taking out this low here and this low here. We can see that we're just building liquidity here. So mark those off on your chart. Let's see. I'm going to quickly talk about GU. I know Aiden already went over that. But again, 3 levels. Our last buy to sell, 1.2500, psych level, imbalance, and then our 1 hour supply zone. So have those 3 levels marked up on your chart to potentially sweep that liquidity. I'd love to see equal highs form prior to these levels being met. Frees up liquidity, allows the banks to enter into large positions here. Let's see. I'm going to go over one more. AUD CAD. So AUD CAD was something that I was looking at taking around 89911. We never got or never saw any sort of reaction from here. Yeah, we had a tiny reaction, but it was not good enough to confirm longs. I really wanted to see more of an accumulation and more of a counter trend break of structure. We never got that. We ended up rolling over to the downside. The reason why I had this level was because we can see that we formed, well, for one, we were downtrending, lower, low, lower, high, lower, low, but then we made a higher high. But however, if you're just looking at the 1 hour time frame, you would say, oh, break of structure, higher high, we should pull back, go long. Well, you got to do top down. 4 hour time frame, what does this suggest? And even the daily time frame. We're in a bearish market currently here. Lower low, lower high, lower low. This is just an overall pullback up into this sort of level here. I was hoping we would get up into 9.6. We never really did. But then we ended up falling to the downside. I do now believe that we are going to take out this low. On the daily time frame, we have an area of demand in here, an imbalance that has not been filled yet, has not been mitigated. So I really would like to see 0.88, 0.87, any of these levels of price to be met before potential longs are in order. So I'm going to go back down to the lower time frame and show you what I was looking at for potential longs. So we had the engineering of liquidity here, equal lows. We had the accumulation, the sell to buy, the counter trend break of structure. We had this sell to buy in here, swept that low. You can see that wick was taken out, and we filled imbalance by coming into this last area of demand. We did not fill imbalance here. This wick and this wick never came down to mitigate this sell to buy. So I was hoping 89911 would provide a nice reaction. This is our last point of return, right? This low produced this high. So if we break below this level, we will, continue with our bearish run on the higher time frame, coming down into 8.8. So I believe that that's going to be the case now. What we saw the other day was a run, a last buy to sell move coming into an area of supply. So now going down to the 15-minute, just as we see with AUD USD and AUD JPY, if we can get an overall pullback, I would like to be looking to short around 90450. So this is the area in which I'll be looking to short if price can pull back up into it. If we can take all the liquidity here, have an overall retracement, I will be looking to short again. Across the board, what's our bias? Aussie shorts, New Zealand dollar shorts, dollar longs for now. But overall dollar weakness, I think we can see for the remainder of the year. And then XXX yen looking to continue to short off as well. I guess I can go over US 30. I know a lot of people like US 30. I don't really trade this, but I just have to go over it. It's a really beautiful setup. But again, this is probably won't be valid for a little while, just because we have to wait for this huge pullback before we can get in. Nonetheless, daily time frame. We are starting to distribute. Actually, we started to distribute about this time last year, around May 2021. So we can see buying climax, secondary test. We had the relatively equal lows. We had the spring break of structure, pulled back, test, continuation. So I'm looking for continued downside pressure here. And if we just look at what price action is doing in here, after the BOS, we pulled back, we failed to make that higher high and then made another lower low. So very good sign of continuations to the downside. We ended up making descending liquidity. We created that liquidity, had our last buy to sell coming into our last point of return supply. And actually, I think it was a daily time frame imbalance as well. But then we ended up falling, breaking counter trend structure. I was really hoping we'd get the retracement back up really into this sort of last point of supply there. But really just the imbalance within here, potentially a little bit higher up. But since we're all the way down here, I don't expect an 80-90% retracement. So really just to take these equal highs. I love when price engineers liquidity or equal highs if we're looking to short equal highs, if we're looking to long equal lows, but in this case, equal highs prior to coming up into a level. We saw that with GBP USD. We saw that with a few other pairs as well. Oftentimes, you can confirm a level not just by the fact that it took liquidity coming into another level and fell and broke counter trend structure, but another confluence is generating liquidity prior to this level being met. So if price comes back up, I'm not going to be looking to short in here. I'm going to be looking to short after the liquidity is run into our higher time frame level, because this is really our area of supply in here, which lines up with our area of imbalance. You can see the last buying volume before the sell-off lines up with our area of imbalance here, right above the equal highs that were generated. So I am looking to short from that level. We'll probably be placing a sell limit when price starts to approach this level. So anywhere between 34,329, 34,655, looking to short that. Stops, I guess we're gonna have to place them up here because there's no clear structure in here for us to place it like above this high here. You could for a more risky position, but we could come up a little bit higher and feel more imbalance here. To be safe, stops above this high. We're not going to break above that. If we are, then we're just going to continue long and go, really long. So that's my level for US 30. I know I talked fast. We had a lot of areas of interest. Please watch the recording of this video if you missed any of these areas of interest. Please mark them up on your charts and do a little bit of confirmation yourself. And this is how I teach sort of my VIP members on a broad level. I'm not going to go into all the detail here because that's really for them, but I'm going to go over a way in which you can look to confirm these levels. And actually, I do want to talk about EuroCAD really quick. I have about 17 minutes left before the next live session with Richard that's coming up next. Stay tuned for that one as well. So EuroCAD, I'm going to look to show you how you can confirm. I think it's right in here. Actually, forget where it was. Let me go to the 1 hour. It may be down here more. Actually, yes, it was right here. Okay, so currently within this downtrend, before any of this price action occurred, we were making lower lows and lower highs. We pulled back, lower low, lower high, and then we made a lower low again. So I was looking at two levels. One, our last point of return, and then our supply zone that we hadn't come up into yet, right? So first and foremost, when we make a lower low, where do our eyes go? Last point of return, supply. Is there a potential area of interest that I can be looking to short this? Well, let's just say that, through our live sessions, through our charts that we mark up within our free community and VIP community, we send out analysis. We have areas of interest that we're looking to play off from. Now it's up to you to determine whether it's a good trade for you or not. So after everything has been marked up, we can see the equal highs. We can see the run on liquidity, buy to sell. We can see clearly the counter trend break of structure. Higher high, higher low, higher high, higher low, higher high, lower low, right? Imbalance was filled, 1.374350. Now, I'm going to go into price in here. So obviously stops would go above that high. Obviously, we didn't hit that. I'm going to do bar replay right in there. And I'm going to go down to a lower time frame. How we can confirm something like this. We go down to the lower time frame, wait for a reaction. Just on a very broad level. I'm not going to go into specifics. Wait for a reaction, wait for the counter trend break of structure, wait for the pullback into a supply level, imbalance, whatever. So didn't tap into it here, did tap into it here, did tap into it here, but we never broke counter trend structure. We continued to make higher highs and higher lows on the higher time or the lower time frame. So we have to wait. Higher high again, we're waiting, higher low, demand failed. We ended up breaking to the downside. There was really no area to pull back up into. I guess you could say, like, if we broke and closed below this level, you could pull back up into this level of supply. That would have been valid for a short. However, we never did that. We ended up just rolling back to the downside very strongly. So we actually broke this time frame structure, higher high, higher low, higher high, tapped up into our level of interest, waited for the reaction. Counter trend was broken, closed below this level, imbalance move. So now let's go to more of a higher time frame, like more the 15-minute, and look to see where we could pull back up into to then get a better entry for better risk to reward that we already have confirmed this trade with. So the confirmation was seen upon the break of counter trend structure, right? We tapped up into the level. We already had our confluence over to the left. We're in a downtrend. We're looking to make a lower low. This is our lower high. So we have confirmed the trade. Now, where do we look to enter? Well, it's simple. can enter off the imbalance. That's really all I see here. There's nothing clear to me. I mean, you could come up into that level, but again, you're asking a lot. You're asking a deep pullback. So I'm really just looking at our most recent areas of supply. You had one here that was met with this wick. You can see that we pulled back up into that inefficiency, created the new supply, and then the huge imbalance move. So that's really where I would be placing my order. Imbalance fell. You can even go the 50% of it. And this is something I'm going to be talking about in just a few minutes with my lesson on inefficiencies. 50% is also very valid. We ended up pushing higher. That's okay. Not all the time will we have that full fill. Sometimes we just get the 50%, the mean threshold bank algorithms. That's what they look to react from. So getting rid of that, that would be my entry to confirm. Stops would, a risky stop would be right just above this high. You would have had a great risk reward, but I probably would have placed it here. I'm more of a conservative trader myself. 1 hour time frame, we can see the 1 hour imbalance, the last buy to sell there, and then we continued. Now, where can we look to pull back up into? We created this 1, 2, 3 pin pattern after we had the reaction here. In the engulfing, we formed new imbalance. So these candles, let's say this candle, this one, all these haven't formed yet. It's just we closed on the 1 hour time frame right there. Now we can look to scale out 1 hour time frame. Just look to see where the imbalance is, higher and lower time frame. See what looks pretty. Pull back up into that, retest it, and then just continue. Very valid level, newfound level of supply after the supply was met. We broke, we simply pulled back, and we just continued. So multiple levels that you could have entered off of. One was here, one was here, one was here, and we can just keep going on and on and on, adding to our position since we know we've confirmed the sells. So hopefully you guys learned something from that. I'm now going to be going over a quick lesson on inefficiencies. This is the lesson of the week. This is what we talked about in our Smart Money Concepts video that was posted on Trading Nut YouTube. And what I'd like to start off by talking about inefficiencies, and I have two good examples I'll go over in a minute. I have 12 minutes, so I have to go a little quick. So what is an imbalance? Inefficiency is simply just a skip of liquidity. Think about it like this. Have you ever, when you were a kid, taken a crayon and a white piece of paper and went like this very quickly, very fast across the piece of paper? I'm sure we've all done that. I know I've done that in school before as a kid. What we notice when we do that is there are little tiny parts of that line that are not completely filled in. There's a skip. There's some white pieces along that line of crayon on the paper. That is what an imbalance is. It moves so quickly, price moves so fast that it skips. It skips in price, meaning this. If we have a candle here, right, another candle here, a wick, and then a straight engulfing candle, another wick, and then we continue. Between this wick and this wick here, right, there was straight selling volume. Only sells were offered within this region of price because within this wick, obviously they were buying. This wick there was buying, but between this wick and this wick, it's just straight selling volume. No sells were, or no buys were offered in this region of price. So oftentimes to make the market efficient, price will come back up, fill that imbalance, either the 50% mean threshold or the full fill of the imbalance before potentially continuing. Because as we know, when we draw that crayon across the piece of paper very quickly, we skip. It's not a full colored line. There are areas where it's just white paper. And that's exactly what it is with an imbalance. It's simply just a skip of liquidity. It moves so fast. And oftentimes you will see these moves prior to news events. You will see these moves prior to tops or after tops and bottoms. So when you see a lower low or a lower high, or a higher high or a higher low, usually the tops and bottoms of a market, like this is a bottom, this is a bottom, this is just, a pullback. Every time we usually see a bottom or a top, it follows an imbalance move. Because what are the market makers doing? They're coming into an area of price and moving away very quickly, creates the imbalance, and oftentimes that is filled. So we can see this high here, we created that imbalance. This low here, we created this imbalance. This low here, before the expansionary move, again, more imbalance was created. So oftentimes it is a great confluence to be looking for inefficiencies when trading. Now, you can't just trade inefficiencies by itself, because you have to add multiple levels of confluence to your trading style. No matter what you're trading, whether that be smart money, supply and demand, retail, I don't care what you're trading, Wyckoff, there's more than just to trade that particular strategy. You have to have more than one concept that you look at, one confluence that you look at. You can't just put imbalance together and just call it a day and be profitable. Adding together confluence, and I'm going to go over a nice example with Euro GBP here. We can see, I'm going to go over market structure because that's how we start, right? We originally talked about this on our first live session. We had a daily time frame supply level, okay? We wanted to come up into that level, and considering that we were still bearish, we wanted to come up into that level and then make a lower low. And we noticed that we were creating this inverse head and shoulders retail pattern. Again, retail just doesn't work. So really the neckline here, okay, this is the neckline. So left shoulder, head, right shoulder. We understood that we had our structure here, our area of supply that we wanted to come into. The neckline, we took the retail traders buy stops. We entered them into the buy stops because they trade the breakout of the head and shoulders. And you can also see, if I just get rid of this line here, the break and retest. So many people, I can't believe people do this. They trade the breakout, the retest, and they try to buy it up again after the breakout. Stop trading retail. It doesn't work. I promise you. Right back to the downside, takes their stop losses. Just because of their ignorance, they lose money. So that's exactly where we wanted to come into. And we talked about that. Watch our first live session. Aiden described this perfectly, how we came into a daily time frame level of supply, and we actually sold it right in there, knowing the fact that people were buying right here. When they buy, we sell. So we were looking for overall shorts, a lower low to be formed somewhere around 8.2 to 8.0 all the way down here. However, what we noticed was that price started to slow down, and we actually came into a level of imbalance. Now, this imbalance here, it's a valid imbalance. However, we have to understand which direction we're trading first. We're trading short. That's the overall direction. So should we really be looking to fill imbalance sell side to then be looking to buy it? Probably not, because you want to be trading in the direction of trend. However, we ended up reacting from our last sell to buy, coming into this imbalance. You can see that there was just straight buying offered in here. There was no selling. We filled imbalance here, here, and all in here. So we're very efficient within this range, but not right there. We actually did fill that, and we had a reaction from it. So we ended up pushing back to the upside. And now we're probably going to be breaking structure, in my opinion. I think we're gonna have a pullback back down into these two levels, and then continue. I think we're gonna actually finish this accumulation and actually go long. But we have to trust structure before this price action formed. We had to trust structure and assume that we were gonna make a lower low. So we never did. We stopped right there. We broke counter trend structure. You can see the lower low, lower high, lower low. We made that higher high. Now, price came up into this previous area of supply. Could we react from this, pull back a little bit, respect structure, and continue short? Yeah, we could. So we were waiting for that. Area of supply, last point of return, counter trend, had a little bit of a sell-off reaction, and then this area of supply never held. The area of supply was invalidated because we never made the lower low. We ended up making that higher high. So now this area of supply becomes demand. So this is where we should be looking to buy now. Imbalance. However, it's important to know that, yes, we have imbalance here. That doesn't mean that it's going to be filled immediately. So if you just, disregarded price action in here and was just solely hung up on the fact that we have imbalance, you would miss out on this whole move and the opportunities in here. You have to take imbalance with other confluences. It's not just one confluence on its own. So we tapped into previous market structure, and I'll get into the imbalance here in a minute. Tapped into previous market structure, knowing that we're bullish now. We should be looking for longs. We start to accumulate in price on the 15-minute time frame. Prior to the market structure being met, we had our Asian range. Break out of the Asian range, enticing the buyers. Come down, taking their stop losses. Enticing the sellers. Break out of the Asian low range. On the 5-minute time frame, we can see an accumulation. This is the 15-minute. I can actually show you really quick. I have a little time. Accumulation here, and then we had the counter trend break, pull back into this 5-minute demand, counter trend break here, BOS, pullback, continuation. So what I was looking for was price to come down into this last sell to buy move after the counter trend was broken. However, I didn't take into consideration the 4-hour imbalance. Imbalance move, that's exactly where we came into. So adding all the confluences that I just went over here, everything from market structure all the way back to the left, everything that's been going on, we finally found an area of interest in which we look to trade. So now we can look for areas of imbalance to play off of or sponsor candles. So we had the 1-hour sell to buy, but now we have the imbalance here. That was filled, and then we continued up. That's how you can trade it. One more piece, and I have 3 minutes, so I'm going to hurry up really quick. Euro USD all the way to the left. Oops. There we go. Sorry, guys, I just have to get there. I don't know what's taking so long. Let me try to find it. Hold on. Here we go. Right in here. Even though we were in a consolidation phase, we can see that, if we are to break out to the upside, let's just say we were in a bullish market, not all the time do we get that full fill like we did on EG. Sometimes we just get the 50% between this wick and this wick. Actually, it's right there. The first wick and the third wick. So between this wick and this wick, there was just straight buying offered, no selling. 50% we can't come down into very perfectly. Tapped into that wick entry continuation. So that's how we can take imbalances, use them to our advantage, and add them to our overall area of confluence and look to take trades based off of them when confluence surrounds it as well. So that is Euro USD. Hope you guys understand imbalance a little more. I know I only have 2 minutes left. So be sure to check out that Smart Money Concepts video that I made that was posted a couple days ago on the Trading Nut YouTube. I talk about more of imbalance in further depth because I just don't have a lot of time here. So I'm going to stop screen share. And I'm going to add Aiden back. And we are going to do our giveaway, our question of the week. So Aiden.
All right. Yeah, perfect. So obviously last week, guys, I gave a very, very important lesson on time and price, right? And so I made it very clear that, the second you sit down in front of the charts for London or New York Open, what is the first question that you need to ask yourself when doing analysis when you sit down at London Open or New York Open? Okay, I made it very, very clear last week. It's very important, very critical that you ask yourself this question and you identify this question before you start taking a trade. All right, so first person to get that $50 giveaway. All right, we only have a couple minutes, unfortunately. I also just put in links from Cam. Cam just dropped a new YouTube video, so check that out. It's in the chat. Yep, all right, so forgive me, Afadi, got it right. Good job, paid attention, very nice. Go ahead and message us on Telegram at Ariel Fx Trading, and we will get you set up with the $50. Congratulations. Very good. Yep. Where is the liquidity? That's what we want to identify.
Yep. So guys, I'm going to drop the link into Richard's live stream. Be sure to check that out. I'm going to send that in right now. There we go. So guys, have a great rest of your day. Congratulations to the lucky winner. That was the correct answer. Be sure to check out Richard. He's up next. So we're going to sign off here. Have a great rest of your day and happy trading to you all. Take care, guys.